Hello, everyone. Welcome. In this episode, I'm going to go through investing for dummies. So, if you have absolutely no clue about investing or what you need to do, this is a video. Stick around. Okay. Before talking about investment, a couple of things you want to do is have a bank account. Okay. So, if you're somebody who doesn't even have a bank account or somebody who's looking at early in their career, you're a teenager, so first thing you want to have a bank account. So make sure you have a bank account, and then there is three envelopes or three categories within the bank account. So depending on a different bank, you can open three different bank accounts itself, or inside that there'll be a checking. Number one, that's for your day-to-day spending. Your emergency fund is very important, so that something goes wrong, you lose a job, car breaks down, so you have an emergency fund. And the third one is for investing. Okay, so have these three things, and that's a starting point for you to think about investing or other things. Is to, if you have £100, so £100, £80 goes for your checking, £10 goes into your investing, and the £10 goes for your emergency fund. Okay, so if you are in a capacity, increase the 10% to maybe 15 to 20%, 20% or if you're new, start with 10% goes into saving, 10% goes into investment, and the 80 is what is left, which is absolutely, those are the only things you can spend for your day-to-day expenses. Okay, that's a number one underlying rule, I would say. And the number two is budgeting. So start monitoring everything you earn and everything you spend. Pick up a Google spreadsheet or Excel or any of the budgeting app, free app, paid app on your phone. Start documenting every penny as much as possible to know how much you're spending. So over an average of 6 months, you will know what you're getting and what you're losing or what you're spending. That gives you an idea how much you can cut around or what you can manipulate to adjust and then invest. Okay, so these are the foundational things you want to do before you can try to think about anything to do with investing. Okay, now that we have covered the basics, now let's start into why you want to invest in the first place. Okay, so simply put, investing is money put into a safe place where you can access it when you need to buy things you like or for when you retire. So it's just the money allocated somewhere else. Okay, so why do you need to invest? Okay, there's three main reasons why you want to invest. One is to beat inflation. So you might ask, what is inflation? Inflation is the cost of the goods going up in value over a period of time. Okay, so same $100 would buy you X amount of things in 2000. Right now, it's not buying the same amount. So that is because of inflation. The cost of the goods over a period of your time slowly increasing. That's inflation. So you want to invest so that at least you can beat inflation. Number two, reach your financial goal. So everybody wants to buy that next best thing or a car or a house. To get to that thing, if you want to buy a car, you need to have the down payment. If you want to buy a property or a house, you still need to have some sort of down payment and some idea of money to reach your financial goal. Or if you're a retiree who wants to have a lump sum money, you need to know what you're spending, and then to hit the financial goal, that's why you need investing. So to beat the inflation, to hit your financial goal, and build long-term wealth. So you want to be comfortable. Everyone wants to be healthy, happy, and wealthy. So this is the wealth part. So you want to be comfortable and do things what you like. So the underlying thing is you want to have some money. So you want to invest because to meet these three goals. Okay. Now that we have covered why you need to invest and what is investment, let's get into what you need to do to invest. Okay, the most popular ways to invest is into business. If you have an idea, you can invest into a building, not a building, a business, and then you can grow. Now, that's number one. Whatever the idea is, pick an idea which you are comfortable with, you have some experience with, or you think that there is very low risk, or you are depending on what your risk profile is. So if you are a person who can willing to take more risk, but again, depending on your age, you want to make sure you check before investing into a risky business. And then if you are very brand new to investing, probably you want to do other things what I list below business than business right now. And number two is shares. So people have been talking about shares and stocks. I'm sure you have heard about shares and stock. Different companies, to generate money, they give a part of the company for people. They can buy that. So basically you're getting a portion of a company or a part of the company. That's called shares. If you're interested in just shares, I will link you a video, just goes through how to invest shares the first time. And for somebody who's new, I would look into third option is ETF or mutual funds. So index funds basically is a group of company where you can invest your money. It's very low risk, and then you can get all the benefits of the share market. So you don't have to understand individual stock market, but you're buying into stock market. So index funds or a mutual fund is number three, a great way to get into it. Number four is bonds. Bonds are loans you give to a company or to the government. So they guarantee you, they will pay you the principal. So let's say you buy $10,000 worth of bonds. They will promise you that they will pay you 10,000 plus the interest. Okay, so that's what the bonds are. And number five, the most popular one, is real estate. So you can buy into commercial properties, you can buy into residential properties, you can buy into a garage, you can buy into a parking space. All those things are real estates. If you don't have enough deposit to buy a property or a down payment for a property, you can look into REITs, is a real estate investment trust. Those are you can buy them like stocks and shares in the market for a very fraction of the cost. So let's say the company X is into real estate and they're doing really well, and their shares are selling for $10 for one share. So you could buy one share of that company. So if the company makes a profit, you make a profit. So that's the idea. So real estate is a great thing. And also there are speculative or high risk things like crypto. Right now you could hear people talking about Bitcoin, Ethereum, all the blockchain other things. That is very high risk, but you want to know before you get involved. But those are the five top things, are the most common ways for you to invest. So okay, now let's talk about how to get started. So getting started, first thing, as I said, you need to have a bank account. You want to understand how much you're spending and then how much you can save so that you know how much you are spending. First thing is set a goal. So setting a goal is very important. So you want to know how much you want to get to. Let's say it's $500,000 or $500,000. So you need to know what your spending is. So if your spending is, let's say, $2,000, and then you can save up to $10,000 per year, that's your saving starting goal. And then you want to know how to hit that goal, $500,000. So you can plan. So you know the end point. Equally important is you need to know the starting point, is to know by budgeting. Know your goal, and then we can start looking into how to investing. So I have a video talk about why the first 100,000 is the hardest. So to get to 500,000, majority of the work or the majority of the friction or the resistance is in the first 100,000. 100,000 is very, very difficult compared to going from 100,000 to 500,000. So I would link that. It's a very important video for you to get in your head. It is difficult and it takes time. So on an average, $10,000 at the SP 500 for 7%, you spend about 7 years to get to 100,000. So it's a long time, but after 7 years, it gets easier. So in that video, I've expanded it a little more. So also number two, before you get started, is your risk. So you might be cool as a cucumber, not getting emotionally swayed by what the market is, or you're a nervous wreck. Everything in the market gets you chills down your spine. So you want to know where you stand. It's a very, very logical thing to do. So you need to be very unemotional about investing. Even though the market is going down, you want to buy certain things. When the market is going up, it's not the right time to sell. So understanding of getting financially educated about who you are in terms of risk is very important. Okay, that's a number two for how to get started. So number three is build an emergency fund. So 3 to 6 months is a standard emergency fund you want to have at any given point of time. Doesn't matter where you are in your life, you want to have some liquid emergency fund. Breaking down of a car, house, emergency leak, appliances, you name it, you want to have some emergency fund. That gives you a mental capacity to plan, but also not sell some stocks and shares when the market is doing well. You don't want to be, the worst thing is you want to be picking out stocks when it's really bad. Okay, so you want to have some emergency funds to manage that. Number three is pick a brokerage account. So these days they're extremely low, like SP 500 Plus or eToro, to name a few. I'm not linked with any of those people, but there is very, very little. They're almost on zero transaction fees. So you can sign into an app and it will tell you what different shares. You can just go buy, sell, and you just need to do a basic ID check. You're linked to a bank account, and then you can do it. With it's there's hundreds and hundreds of videos about which is the best. I think I have a eToro site which I've been using. I'm in the UK, and also I have a Hargreaves Lansdowne. They're not the best, but I've been holding their money for a while. They charge $12 for £12 for every transaction, but I don't do weekly transactions. I do monthly once or twice, so I'm okay with changing the whole account. Okay, but look for a low entry exchange fund or like a trading fund. And number four is, who do you start with? So you want to look for historically good companies like Vanguard, Fidelity, Schwab's, HSBC. You can't go wrong with an index fund and a Vanguard. So all my money for my kids and other things I've been investing into Vanguard SP 500 index fund. I think that one is called VOO. So I will put a link. That's is a good starting point for you to go. You can get tax benefit. The fees are cheap as chips. It's silly money. For I think I pay about $70 for 10,000, managing the 10,000 per year. So for $10,000 I pay about $70. It's very, very, very low compared to everything else, and the returns are 7-8% on an average. Okay, so also when you're new, start really small till you understand and diversify. So diversify is basically not putting all the eggs in one basket. So the best thing I can tell you is to buy a SP 500 or index fund where you are buying 500 companies instead of just picking one or two companies. Okay, those are the five things you want to do to start. So there are other important things to consider. Very important things is the market will fluctuate. So the markets are always going up, markets are always going down. That's the nature of the things. It could be emotions, war in Ukraine, war in Gaza, Palestine, Israel, all the conflicts has a big impact on the market. Right now in US with the election coming in November, there's a lot of variation. So you need to understand there's going to be volatility. You want to buy when the prices are low and not sell when prices people are panicking. Okay, so that's the emotional part of it. So number two, time in the market will beat the timing the market. So let me rephrase, time in the market will beat timing the market. Trying to understand when's the best time to buy or sell is a gamble. People who say they know, they don't. So you want to have as long as possible. So you want to think about this way. If you have only four choices to make and you buy four stocks or shares, can you hold that for the rest of your life? That's the mentality you need to do. So those are the only four things I can hold. So pick those things and then you want to hold on for a very, very long time. So Warren Buffett is one of the greatest investors. So he talks about, think about having very minimum or very few decisions you can make. Can you pick something and then hold for the rest of your life? That's what you should be thinking about in terms of investing. Okay, so the time of the market, the time in the market beats the timing the market is a thing to remember. Do your research. So I'm not a financial advisor. Anything you do, you want to check with your financial advisor, a local independent financial advisor who has your back. Check and then invest. Invest small. Do your research, get yourself financially educated, and then start investing. So it doesn't matter which age you are, investing is the only way to go forward, build your wealth, and then also teach your kids, grandkids, or wherever you are. You need to be the one person in your family who breaks the norm, understand, and then start thinking about generational wealth and other things. I hope this video was useful and gets you to invest. So I started when I was 27. So till 27, I had no clue about investing. I'm in my mid 40s, so I've been investing for a while, and every time I learn more, I want to tell people, someone like me who didn't know what to do in their 20s. Thank you again for watching, and there are more videos if you're interested. Till next time, thank you and bye.